Hi, dear Odoers. Welcome to this particular session. In this particular video, we will be looking at Odoo stock accounting, and then we will be walking you through the processes and the accounting procedures that are required of each and every configuration as far as the stock accounting is concerned. And so I have that one or two things that will take us through. I have a scope concept that we have developed to be able to take us through. So as you are seeing on your screen at the moment, we have developed this particular process mapping that will give us the idea or the understanding that users and implementers are need uh, and implementers uh, that will require users and implementers to go through to be able to have a physical and a perfect understanding of these operational processes. Okay, in line with this, you can see that from the very beginning, we are looking at three stock accounting or stock GL codes. If I take you to the product category bit in Odoo, you will admit that we have some of these processes that we require or that will require the configuration of each and every my databases. So if we come to, I'll log into Alibaba that we have created for this particular purpose. And so let's take a look at the, either you go to inventory, you can have the product categories option that you need to do your customizations accordingly. So we have the product categories here in accounting, and I have configured one known as chemical inventory. Similarly, if you go to inventory configuration, you will have same product category, and you will be able to kind of configure them. One thing we need to understand and appreciate is that we have these three accounts: the stock valuation account, the stock input account, and then the stock output account. These are the three asset accounts that are required to be configured properly so that users and implementers alike will be able to appreciate and understand the scope of this configuration in Odoo. Um, you will admit that the stock input account, which is in literal terms known as the goods in transit account, Odoo has mentioned it as interim receipt account. This is an asset account, a clearing account for that matter. Similarly, we have the stock output account, which we literally term as interim delivered or finished goods that are supposed to be delivered to customer site. Or better still, you can call them trading goods. Finished goods is works for me. Okay, this is not production scope, so we will not include a production account here. So these three accounts are very, very crucial. And if you go to your balance sheet, you will be able to see these transactions. Now, what will happen is that we are supposed to appreciate these concepts. We are supposed to appreciate these concepts, and this is what happens at the beginning of your processes. So anytime you procure an inventory item, these are the stages that is supposed to go through as far as the stock accounting is concerned. The first point of contact is to create the your RFQ and proceed to process it to a purchase order. So after processing the purchase order, we are expected to receive the item in stock, and this is what will happen, or this is the first point of entry. The moment stock is being received um, in our inventory. So literally, this is before billing or the purchase. So after the purchase is processed, after the procurement process is done, and the receipt is done in inventory, this is what is going to happen. So this is before billing. So let's take a look at it correspondingly and see how this one works. So we need to create a product and allocate this particular product category to it. I have already done that, but for the purpose of this demonstration, we will just create a new product and call it um, MAG 101. We will, as usual, set the product type to storable product, and we need to kind of select our product category. If we have any reference, you can internal reference code or whatever, you will be able to do that. Now, these are the two key things that we need to do to be able to run this process successfully. Now we have created MAG 101. This is an inventory product. The quantity on hand is 0. So we will go ahead and see what happens in our pages. So if we go to the pages model, um, we will process a new pages. We will pick our pick supplier gateway as my vendor. My reference was just going to be test. And as usual, let's see what happens when we go for the MAG. So we are going to procure this MAG. The quantity we are procuring is 100, and the unit price will say is 2.25. So I will save this, and then I'll take us to the balance sheet so that we see what literally is happening in the balance sheet before we proceed with the processes. So if we go to the balance sheet in finance, you will see that under current assets, we have the finished goods, which is the interim delivered account, and we have what is the other one? Interim receipt, which is the goods in transit account. So these are the two clearing accounts against the inventory valuation account. As you can see, we have only 520 that we did earlier sitting on the valuation account. So at the moment, there's nothing coming in. So let's go and process the the PO and come back and see or take a look at what happens in the balance sheet. So let's confirm the PO as we are seeing. The PO is now confirmed. The system is ready for receipt of item. So this uh, can be done either in inventory or in purchase by way of administrative right. So either you use this workbench, the smart button, or you use the receive product button. In either cases, both works. So you can see the quantity demanded and the quantity that we have, 100. We will just validate this. And now that we have validated and confirmed the receipt of this stock items, 100 pieces in our warehouse, let's go and see what happens in our balance sheet. Now, if we go to this product, we'll be able to see that we have 100 on hand. We have received 100 of this on hand. Let's go to balance sheet and take a look at what happens our interim receipt account. So this is how it works. In the current asset or under current asset, you will see that the stock interim account received is 225, and this is credited. This is credited. This is an asset account. By default, it has a debit balance. If you are, and then the valuation account, inventory valuation account has increased by this particular figure. So that's how come you are now seeing 745. So initially it was a little bit above, I think, 100, 500. Now we have 745. So the value of our asset has increased, but this is tied to our liability account to clear it. That's why it is credited. So this account, the valuation account, is debited, and then the interim receipt account is credited. Um, let's go into the flow and take a look at what is happening in the flow. So this is what we are seeing. We are saying that before billing, the inventory valuation account is debited and the interim receipt account is credited. And that's exactly what we are seeing here. And if you navigate into it, you'll see literally what is happening. So this is exactly what we are saying. If you take a look at the stock journal, you see what is happening. The goods in transit account is credited and the inventory valuation account is debited. So this is exactly what is happening in your stock. Now, similarly, we need to now proceed to invoice or create a bill. This entry has not been, a bill has not been created for it yet. So that's how come the goods in transit account is credited. Yeah, exactly. Now, if we generate a bill for it, um, we are expecting the goods in transit account, which is credited, to be debited because it's a clearing account. Remember, we mentioned that this particular account is a clearing account. The internal receipt account is supposed to be a clearing account. So much as we credited it against the valuation account, which is debited, we need to debit it to credit our liability account in an attempt to pay the supplier. That's literally exactly what we are doing. Now, if we go into it, you will realize that we just need to create a bill. We could do this in finance, but for the purpose of this demonstration, let's create it directly from this workbench. I mean pages. Yeah. So here we will just confirm this bill. Let's add the dates and confirm this bill. Now we have confirmed this bill against this particular vendor, supplier gateway. And that means that if we should proceed to take a look at our finance bit, uh, in our balance sheet, if we take a look at our current assets and we take a look at the interim receipt, which is the goods in transit account, you see it is now zero. This is because it has been correspondingly debited and then credited to the liability account. So if we come to our payables, if we go to supplier gateway test, you will see that uh, the the corresponding liability account has been duly credited. Yeah. So that means if you go to your age payable and the supplier gateway, you will be able to see the figures. Yeah. If we open it up, you will be able to see the figures, meaning there is a previous transaction that is sitting, which is 520. Now we have 225, making in the 745.